Hello, everyone, and welcome back to another episode of the Delphi Pod. This is the last episode in our series of the Year Ahead reports. If you haven't listened to the other ones, they're all in the feed. We did gaming, then markets, then infrastructure, then DeFi. This one is going to be focused on what is the hottest topic in crypto right now, and definitely the most requested report since we asked people what report they wanted to read. This is the DEAI and DPIN one. A lot of DPIN things kind of have to do with compute. So a lot of them fit into the DEAI bucket. And then, of course, there are some other stuff like wireless and energy that we also touch on. But basically just a whole coverage of this sector. We did do a 4-part series on DEAI that is only a few months ago, which is all free for anybody to read. And then this one goes a bit deeper into some of the newer stuff, like some of the agent platforms and agents that have been happening since then, and some other areas. I mean, this space moves so fast. So, I mean, even though we did a whole 4-part series 2 months ago, there's a lot that's happened in that 2 months. So maybe we can just start it off here. I've got PD, Pondering Durian. He kind of has led the whole AI stuff here at Delphi. And then we've also got Michael Rinko from Markets team, who helped out on this. And then we got Robbie Peterson from the DeFi team, who helped out on this as well. So with that being said, I think I want to kick it to PD, and maybe we'll just start with high level AI, where we are, kind of like macro overview.
Yeah, so first of all, I do want to say it was very much a joint effort. So I do want to thank Robbie and Michael for joining the team and spitting out 130 pages of what is hopefully entertaining content. But yeah, I guess I'll kick off with the macro, and then obviously, Michael, I know this is near and dear to you, so please jump in. But yeah, I guess all eyes are kind of on the scaling laws, and I think a lot of conversations in Silicon Valley are, hey, have we plateaued? And I think that the general consensus, if you watch Ilya's talk, is that pre-training there is very much reason to believe that some of those tailwinds are starting to slow, and we might be seeing a plateauing along that vector. But I'd say, that is definitely not the only tool in the toolkit. And so there's a lot of other, reasons to be bullish, even in the event that, that starts to slow. And frankly, we're not even sure if that's going to slow down. I think, Grok 2 being trained in Memphis is the first 100K H100 cluster that should be coming out of production from that training run quite soon. And maybe that kicks the door off the hinges and we're just full on in an explosion of CapEx. But in the event that that doesn't happen, I do think there's a lot of other reasons that performance will continue. And so I think from synthetic data to reinforcement learning with AI feedback, and then to kind of the new trend, which is, more inference compute, like basically letting models think for longer. And we've kind of seen a preview with version 0.1, and maybe, it sounds like there might be a big announcement coming out of OpenAI, basically as we speak. But yeah, and then, also agents as well. So that's kind of the conversation that at least we've been paying attention to. And it does seem like there's, areas to be a little bit concerned if you're NVIDIA or you're, a GPU provider that's really been a beneficiary of pre-training. But if you're, one of these other bottlenecks that's starting to emerge, and I think one that is particularly bullish for crypto and AI is kind of if data becomes a bottleneck, pre-synthetic data being cracked, then I think there's a lot of room for opportunities with those type of plays. So yeah, I don't know if you guys have any views, but happy to debate in real time.
Yeah, I think you hit the nail on the head there. I guess from a markets perspective, two of the things that we wrote about in our kind of macro AI section are, I think a lot of people are looking at AI right now and they're like, wow, NVIDIA ran up a lot this year. Palantir is up a lot. Some of these other AI, you look at crypto, all the AI names are up a lot. It feels a little frothy. It feels almost like a bubble. So people are wondering if at some point, does that pop? The way that we think about AI, I think AI is a little bit different than past technology waves. So if you look at, mobile or social media kind of being the two most recent computing waves, a lot of the wealth that was created within those cycles was hyper centralized. So you had the kind of app developers, the engineers that sat in San Francisco that benefited. And then you had kind of the influencers that were in LA or New York that disproportionately benefited from those waves. And I think the interesting thing about AI is that the wealth is a little bit more spread out. And that's mostly a function of just AI requiring a lot of physical inputs. Like, yes, it's like a digital technology, but to even build it, you got to get the electricity, you got to get the chips, you got to get all the interconnects, all of the hardware that goes into like even making AI. So kind of the wealth that's already been created from this kind of huge wave has been a little bit more dispersed than past cycles. And I think that's been reflected in just the like broader economic performance of the US, I think. I think the stock market's also reflecting that. So that's kind of an interesting like thing that makes this kind of bubble, I guess, if you want to call it, like feel more sustainable. The other thing I think that's really interesting to watch that we wrote about is the question of like, when will nation states really get involved in this race? People have been predicting that like AI will be kind of this like game theoretic race between nations for decades now. To be honest, we've yet to see that. I think we still kind of think that's coming. It's just a matter of time. But the U.S. is like the clear front runner on just about like every metric. We have the most, frontier labs, the most data centers, the most kind of research scientists. So we have this huge lead. Europe is kind of still in this like very much like we're going to regulate first and innovate second mindset. And then I think the big elephant in the room is China. And everyone's kind of looking to see like, when does Xi Jinping get scaling pilled? When do they start building data centers at the like speed and scale that they were building hospitals during COVID?
Why do you think it's taken longer than expected to see all the nations get into this arms race?
I don't have a good answer for that. That's something that I thought about. I really don't know. I think part of it is just like politicians don't fully understand this technology yet. And if they do, they're a little scared because similar to crypto, AI is like taking power away from these centralized kind of entities. And now everybody has ChatGPT in their pocket. You don't need to go to the government for an answer. You can just ask ChatGPT. So I think that might be part of it. But PD, what do you think?
Yeah, I guess my answer is pretty simple. Is like, it's just really expensive to even be a part of the race. And, the hyperscalers that are involved, like a lot of times their market cap is, much more sizable than the vast majority of countries. And so, it is implausible that the vast majority of countries will be able to play in a race that is so capital intensive that, only, so far 5 or 6 companies on earth that are truly, nation state scale. The vast majority of them are in the US and have been dominant and dominate, market caps of major indices. These are just huge companies, and they're, throwing off 1.5% of basically GDP and operating cash flow, and have hundreds of billions on their balance sheet. And that's just something that most nation states cannot replicate. So yeah, I do think China could put up a credible contender just because they have the resources at a nation state level to do it and the capability of the talent. But outside of those two, I think realistically it would be difficult for others, assuming it remains basically a CapEx type of competition that other players will be able to keep up.
Yeah. Okay. So I think that's like pretty good macro overview. Maybe we can get more into the weeds on some of the crypto AI stuff. I know, we did this whole 4-part series before, but that was like right before all the agents and everything really started taking off, right? And so we've seen a lot kind of go on since then. I kind of want to have a discussion on like the agents, the agent platforms, what people kind of like think of all this. For me, it's kind of like the more I look into it, the more I get convinced on just the platforms or frameworks. And I know this is a very, more of a risk averse, I guess, standpoint. But I mean, you've just seen a lot of these frameworks and platforms do very well, right? Like Virtuals was around like 100 mil, I think, when Go launched. It tapped 3 bill. AI16Z had like some weird stuff going on early, but they seemed to work through that. They got close to $1 bill. You've had this new ARC framework come out. And then meanwhile, you've had like a lot of these agents, especially agents on Solana, I found is very hard for them to crack through like the 10 mil market cap range. even if the tech is interesting, right? I think that, there's two that we followed a bit, right? And of course, like NFA on this, these are very low market cap, but like Roperito and TEE, right? These are both unique agents. The tech is cool, but it's like no one really wants to buy the token. I know with TE, it's a bit more nuanced because it's not like officially endorsed by both teams, right? So there's a bit of that there. But then you see like Fartcoin go to like 1.2 bill, right? Which is again just like a pure meme. And I think a lot of people were excited with this meta that we were shifting away from like the pure meme aspect of it and going like a bit more toward the tech play. And then, it's hard to see a lot of these agents, even like Luna on virtuals, hasn't really gone anywhere for a while, right? But you've seen like the game framework do pretty well. You've seen obviously Virtuals token do pretty well. So it really feels like platforms are the things that people are interested in now. But I still do think it makes sense.
I feel like we've got Duncan on the podcast, just a classic picks and shovels type guy, Ceteris.
I mean, the thing is with this sector, I just think it's going to get very big. And so I think picks and shovels can be boring if you're going to like an established sector. But these picks and shovels they're not like as cheap anymore, but they were pretty cheap early on, right? So maybe like the agents go crazy late cycle or something, unless the cycle's over now.
I'm curious to hear, Robbie, what you think here, because you wrote the Bible on moats. But like one way that I've been thinking about agents and these platforms and how it's all going to like interact is, some people are starting to compare or comp these platforms, even some of these agents, towards like L1's last cycle. And it's like, is this the new L1 trade where like you can hit a 10x in size? Are these things going to run to like tens of billions of dollars? And I think it's definitely possible. One kind of difference that I see though between agents and platforms and then L1s is L1s seem like they develop like a stronger moat over time, because like just at a very basic level, if I have my money on Solana, to move it to another L1, I have to like press buttons and like manually move my funds, which is hard. It's scary. It's a little sticky. People don't like doing that. These agent platforms seem like they have less of like a lock-in than an L1 does. They don't necessarily like accrue liquidity over time, which like helps them build up a moat. And I also think we're like so early into this trend that, to your point, Ceteris, like the market seems to be kind of telling us that like much more is coming. We barely even cracked the surface of like where this is going. So I think people are very hesitant to like take a big swing on the app layer when you can kind of bet on the infrastructure layer and maybe get exposure to like everything at the app layer. Yeah, that's one way I've been thinking about it.
Yeah, I mean, I think kind of on the moats side of things, a couple thoughts there. So one, I think it depends on if you're talking about agents or you're talking about the platforms, right? I think if you're talking strictly about agents, I think kind of the delta between having a moat and just attracting attention is effectively zero. And I think it really is just an attention game, and kind of that is your moat at the end of the day, right? Now with the platforms, I think it's a little bit different. I think frankly, at this point, no one's really thinking about moats. And it's kind of more similar to the agents in the sense that it is just an attention game. And yeah, no one's doing, sort of this competitive analysis about these platforms and trying to figure out, who's long-term going to have the most sustainable kind of competitive advantage here. But I think over the long run, I think it will matter. And I think it's increasingly mattering already. And the framework I would kind of apply to this is the same framework I applied to kind of DeFi protocols and, any sort of crypto app more broadly. And that's asking kind of this question. If I had $50 million in subsidies, right, and I forked this protocol, am I able to sort of steal significant market share? If the answer is yes, then, you don't have a moat. If the answer is no, I think you do have a moat. I think it kind of, it's an oversimplification to some degree, but I think it's a decent framework for analyzing these things. And I think for these platforms, the way, I think at this point, the answer is, I think it's pretty easy to probably steal significant market share. I think what's going to probably matter more and more is when we enter a paradigm where you have agents interacting with agents on these platforms, which we're starting to kind of see a little bit. I know PD kind of alluded to this in the AI piece, but I think once you have that, that's where network effects actually start to kind of take off. And then I think it becomes a lot harder to sort of replicate these different platforms.
Yeah, I think that's a good point, right? Like I still think the best risk reward is still the platform plays. And, we're still very much in the Carlota Perez, speculative mania. And so, moats aren't really coming into play as much as people just think about how large the TAM is. And these, couple of players seem like they're in the lead. So they get capital and people hope that they can figure it out and carve out a moat over time. To me, the two moats, one, as Robbie mentioned, is like interoperability within a framework. And so, if one framework basically develops a power law that a lot of people start using, can those agents more easily interact, and can they come up with solutions that are, more interesting than basically heterogeneous frameworks? I think there'll be a large mesh. It doesn't seem like a place where there would be a massive power law around one particular framework. I do think it'll be a patchwork. But that's one potential mode. And then also just like developer mindshare, right? So what you're seeing with AI16Z, even if they don't have, any monetization mechanism, I do think the amount of excitement in terms of developer activity and contributions on their GitHub just does seem like something that will eventually be valuable. So I almost think about it as like Facebook, pre-mobile, and a lot. This is a big stretch. It's not Facebook yet. It's like super early, but in terms of eventual monetization, if you have, the eyeballs, it tends to work out. If you have the developer activity, it tends to kind of work out, right? And so maybe it won't, maybe it's different this time, but that's kind of the bet people are making this early on in what is hopefully a really, really large market. But I agree, it'll be fiercely competitive. And, outside of agents churning daily, I think you're going to start seeing, a gazillion frameworks launch as well. So I think you take a portfolio approach, make several bets in the leading platforms, and be ready to, evolve those views, because I do think they'll change over the next 6 months.
I think like AI16Z versus virtuals is interesting because they're both kind of these platform plays, but they're also very different. Like virtuals is this place where you go and you launch agents, and then, you pair the new agent token with virtuals. You have to pay some virtuals to launch it. There's kind of that burn. It gets the fee income, all this stuff. But it's very much like this coordinated launch pad for agents. AI16Z it started as like this DAO, right? And it like this hedge fund essentially that you were just buying at a crazy premium to NAV. And it was like, hey, why are people paying like 100x the premium to NAV on this DAO, right? But now you see like the ELIZA framework has been going absolutely insane, right? And so now you can kind of like start to work in, other things. They don't have the monetization side figured out, but their framework is obviously like the leading framework right now. It's the one that's getting the most interest out there. And so I don't know. I think these are two like interesting platform plays, which are also very different in kind of like the construction and the actual value accrual to them. I think that's why virtuals probably trades. I think you can argue that AI16Z tech is better than virtuals. I don't know. Maybe that's a hot take, or maybe they're around the same. Let's say they're around the same. Okay. But virtual still has 3x the market cap or 4x of AI16Z, because it's like, it's more coordinated, it's simpler, it like everything kind of flows elegantly. And it's also like the everyone's looking for what's like the base token, right? And it's like, it's not ETH, it's virtual, right? And so that kind of goes into it too, I think.
Yeah, I agree. It feels like virtuals is very much like constructed from the bottom up, like very organized, like a pretty intricate design with like decent incentives baked in. And then the other platforms like AI16Z and Zerebro, like, basically hit a jackpot in terms of, kind of meme coin and attention. And it wasn't really originally supposed to be, monetized in this format, right? You started with an agent with Zerebro, and then you're basically like, holy shit, I have a $400 million valuation. I need to justify this. Like, what's the best way to do that? Like, oh, actually, probably the long tail and launching my framework, is probably the best way to do value accrual. And then AI16Z is kind of similar in that it was kind of an open source framework. They were monetizing it via like meme coins and their own agents initially, which, is kind of a weird way to monetize open source software. And I think, at some point they will hopefully make it a little bit more official and bake in some sort of value accrual, but maybe not, right? But yeah, I do think it's kind of like the sporadic, chaotic, bottoms up Cambrian explosion versus like a more elegantly designed system from the beginning. And frankly, we'll see which one wins.
Yeah. I also think the chaotic thing, like I put out this tweet this morning that'll piss off a bunch of people. October 13th is kind of the day I consider this crypto AI agent narrative to begin. That's a few days after GOAT launch, but it's the day that everybody started talking about it, right? I don't even think you guys wrote about BitTensor in this report. If you did, I don't really remember seeing it, but it's down 35% since that day, okay? While you've seen GOAT came back. I guess Farcoin is the terminal token now. But you've seen like virtuals go up a ton. You've seen AI16, Cerebro, all this stuff, right? I think that whole chaotic thing is just, you've also seen like a lot of these meme coins have not done too well since then either. You've had some of the big top dogs do well, but a lot of the mid to smaller ones have totally sold off now, right? And so I think there's going to be a lot of money made in this sector and a lot of money lost, right? Which I don't think is a hot take. It's like just what's going to happen because this is all moving so fast, right? Like if you just held your Tau bag over the past 2 months, you were early to crypto AI and you lost 35% instead of making like 10, 20x, right? And if you're not like completely plugged in to this sector, today I can say, yeah, virtuals is the easy set and forget buy, but it's also over $2 billion now. That's not like cheap. And maybe something better comes along for this sector. It's just so new. It's like everyone's just kind of throwing shit at the wall. And I think the fact that Farcoin is now worth 3x GOAT, it's kind of flipping a lot of, everyone was like, oh, GOAT's the Bitcoin of this crypto AI narrative. Yeah, it's just a meme coin, but it's like first, it set off this whole wave. No way it's going to be like flipped or anything like this. A lot of these preconceived notions, I've kind of been thrown out the window. So that's why I find the sector interesting though, is because I know we have these internal chats and there's like some people that have just been waiting for like their agent to do well. And it just hasn't worked out for them.
Unfortunately, Rinko and I are in that bucket. But yeah, Ceteris, if hopefully our listenership read DAI 3 and DAI 4 and ditched the Tau bag for some more creative endeavors. So fingers crossed it continues.
Yeah, I think on the market share point, like I see market share within this AI sector being extremely fluid for the foreseeable future. And like this is something that we see even within kind of Web 2 macro AI. I think from 23 to 24, OpenAI lost just under 20% of market share, mostly to Anthropic. So the space is incredibly fluid. I think the pace of innovation kind of makes this like much more of a trader's market than kind of like just a trending market that you could buy and hold over long periods of time. And one of the big questions that we talk about in this piece is like, what's going to be the next big breakthrough? And I think people are kind of asking that on the macro AI side, but also like on-chain crypto side. Right now the agents are cool, but they're still kind of like toys. You know what I mean? Like the most that these things can do is like order a pizza for you. That made headlines a week or so ago. They've moved over to these T enclaves, which I know Ceteris, you guys probably talked about in the info report. So we're starting to get, more capabilities and more like credible, like autonomous agents. But we're still not quite at the point where, like, at least in my opinion, these things are like legitimate, like instantiations of intelligence that are like taking their own actions in the real world. There's usually some sort of human somehow in the loop. To me, that just it seems like market share is gonna continue to be super fluid until we get deeper into this trend.
Yeah, I 100% agree. But kind of back to the macro discussion, like I do think one of the reasons I'm bullish is even in the event that we don't see any more capabilities emerge, which I think is highly unlikely, or even if they just start to slow down, I just think there's so much white space for how to use these tools that haven't even begun to be considered, right? So it's like literally top of the first inning in just figuring out how to productize this new generation of software, right? And I've been encouraged by what we've seen in Web3 and the amount of creativity, because you basically just take the baseline intelligence and the tools and you get it in the hands of a bunch of weirdos and a bunch of really smart people that might not work at, megacorps, and they do cool and interesting things, and they do a lot of experimenting. And I think, even in the event that capabilities don't have a step function increase, which I think they will, I think there's a ton of room to run with basically just what we have already.
Okay. Maybe we can move on to something Rinko brings up all the time. There's very strong opinions on each side, which is WorldCoin and like WorldChain. I know we wrote about this a bit in the report. This valuation has always been super insane to me. Every time Rinko brings up maybe logging it, I look at the FTV and the unlocks and I'm like, what are you talking about? I need that young 20s energy back. But, you guys actually did make a decent case for it. The potential for like WorldCoin maybe to flip like OpenAI at some point. I'm still not planning on getting my eyeball scanned, but I know some of you guys here have done it.
It only burns for a couple days.
Yeah. But
you close your eyes and you see Sam Altman's face.
Yeah. But you guys, so maybe we can jump into this WorldCoin quickly. And like also there's like a stablecoin angle you kind of put here after too, right?
Yeah, so I guess in this section as a whole, like, and we can jump into WorldCoin, but basically just wanted to hit like four segments of DAI that I thought were particularly crucial to the outcome and the relative market share of Web3 meets AI versus just whatever AI ends up doing on its own. And kind of those four, I guess, pillars ended up primarily being identity, payments, decentralized training, and data, right? And so I think just with the capabilities that AI is continually generating, you're just going to see, a ton of synthetic intelligences on the internet. And we're already seeing it. Like, you look at our reply tweets for the Delphi year aheads and it's like all bots. And so I just think like as they get better and better, there'll just be more demand for proof of humanness. And it just seems like there's three broad approaches, right? So there's like the state-backed biometrics, almost like, Aadhaar in India. And then there's kind of like the specialized cryptographic biometrics, which is the WorldCoin and World Playbook. And then there's kind of the patchwork, government ID plus ZK TLS plus social consensus. And it just seems to me like in the event that AI gets really good, which seems likely, just from everything that I'm seeing from a trend perspective, then you would need really good tech to prove that someone's a human. And the only person that's investing heavily in doing that right now through like, boots on the ground, scaled hardware is WorldCoin. And so it's like very expensive, very painful, but in the event that that is the right playbook, then that's a very real moat for the next generation of the internet when a lot of other stuff is breaking. And I think identity and payments are a very good base layer platform from which to launch, a lot of other applications. In the event that that world plays out, even if WorldCoin is 27 billion right now, that TAM is a lot bigger in my mind, but there's a lot of risk to that execution roadmap.
I do think when you talk about like moats, this is like a real one that if they get it is basically, nothing's impossible, but basically impossible for like someone else to take them over then because of all the hard work, because of all the deployments.
The FDV itself almost becomes a moat because it allows them to pay. These tokens are unlocking and they're paying for real world operators, in Africa that are scanning people's eyeballs. And if you don't have that same valuation, you literally can't afford to pay those same people to go out and scan.
Yeah, I actually think that's a great take. And when I was writing kind of that moats piece, that's something that kind of came up is like number go up and being able to craft sort of a strong narrative that subsequently allows kind of number to go up is kind of a moat because that kind of kicks off the flywheel where you have more incentives to kind of give out and it's easier to bootstrap a network. But yeah, I 100% agree. I think, what WorldCoin is trying to do at scale is I think the ultimate moat. It could actually be a very strong wedge to kind of building out sort of this ecosystem around sort of that identity layer that TD alluded to. I think that isn't obvious today, but I think kind of as we head towards this sort of agentic economy, right, I think it will become very obvious that there's a need for that. I also think one of the things that kind of went under the radar is sort of their world app kind of ecosystem. So they're kind of building this app store kind of on top of WorldCoin. No one really talked about it, but I do think that could be pretty consequential and important. And I think, in crypto, at least, we kind of lack this app store. And this is something I kind of wrote about in DeFi Year Ahead report. But we kind of don't have this canonical like app store where you access sort of crypto apps. And I do think whoever can kind of win over that market, whether it is, Apple, it easily could be. I probably don't see them going that route. And I think, Apple and Google kind of have been blocking a lot of crypto apps from getting on their app store, right? I think the wallet layer is probably the best contender, I think, at this point. So MetaMask is kind of doing this with MetaMask swaps. You're seeing Backpack has now integrated blinks. So they're kind of creating like a monolithic user experience akin to sort of TikTok or, even like X, where you're accessing not apps, but you're accessing blinks. So, and then indirectly interfacing with the apps. And then WorldCoin, I think probably has, at least at this point, or at least at scale, I guess, would have the best kind of wedge to building this out, where they can actually prove that these are humans and these aren't agents, right? So when you're accessing their apps on their app store, you're interfacing directly with humans. So yeah, I think it's kind of a call option on a very asymmetric, out of the money call option on sort of, these agents becoming very mainstream, heading towards this agentic economy, and therefore more demand for proof of personhood.
Yeah, I think on the WorldCoin point, like my kind of one-liner on like why I find it interesting, why I think it's kind of worth following is like, if you think people will find value in distinguishing between a human and AI online, then we need some sort of way to separate those two buckets. And right now it's like relatively obvious, right? Like you guys were just talking about, like under our Delphi tweet, there were all these bots. Like you could still kind of tell the difference between a bot and a human. But if you play this trend out a little bit longer, it's going to become increasingly harder and harder to tell the difference online. So then it just comes down to like, is there value in telling a difference between the two? I think there is. People didn't really understand that, right? There wasn't like an obvious example of like, oh, that we need to distinguish the difference. That is until like GOAT actually happened. I think GOAT was like the first big example, and it was kind of flipped actually. GOAT was the first time people wanted to prove that something was an AI, not a human, right? Previously, we wanted, is this guy a human, not a bot?
Yeah, remember the spelling mistake?
Of course.
It dumped GOAT's market cap. So like GOAT, Truth Terminal, in case you're not up to speed, is like this agent made by Andy, and whatever, he endorsed this GOAT meme coin and everything. And then one day, Truth Terminal tweeted something and had a spelling mistake in it. And people aren't used to seeing spelling mistakes in like ChatGPT and stuff, right? And so everyone thought that it was just Andy writing these tweets at this point, right? And so you kind of had this real life Turing test, maybe on like a lower level of it, but everyone was trying to figure out like, oh wait, is Andy just tweeting these things out, or is it actually the agent doing this? And then it kind of led people to understand, oh wait, so he's using this like jailbreaked model, okay? So spelling mistakes are actually possible here because of the data that's being trained on. And so you kind of saw everyone had to figure this out in real time.
Ceteris was very nervous. Net worth went down about 50%.
No, I went to bed. I slept through the whole thing. I woke up and it was over. And but I looked at the chart when I got up, and I think it wicked down to like 7 cents or something. It was crazy. Lots of panic on the timeline. But no, I mean, yeah, on WorldCoin, yeah, I do think that obviously they have a lot of regulatory issues. In Europe, it's really hard. Everyone seems to like want them gone. But that's anything AI in Europe. I think that's anything in general in Europe these days. I don't know. They definitely want to keep following.
Yeah, I think it's like it's a call option. I don't think it's a cheap call option. 27 billion for this roadmap is pretty aggressive, but it is one of the few like potentially transformative projects in crypto at the moment, based on the world that I forecast, 5 to 7 years out. And so that alone just makes it worth keeping an eye on, because that's, a $100 billion opportunity at the very least.
Yeah, I do think that it's very rare that an asset in this space goes over 100 bill. There's not a lot. And it's definitely one of those that you could see it. Like if you told me in 5 years from now, WorldCoin was $500 billion, I would say like maybe, yeah, I guess I can see it.
I mean, it has the most plausible chance of like solving the Sybil problem, which I see as like one of the biggest problems in all of technology right now. Like crypto struggles, airdrops are kind of screwed because of the Sybil problem. Social media is like a bot fest because of the Sybil problem. Like this is a problem that like affects almost every industry. If a crypto project, if anyone can like solve that kind of base layer problem, I think that's going to be like enormously valuable. And there's all sorts of approaches which PD wrote about, but in my opinion, I think WorldCoin has kind of the best odds of solving that in this like super intelligent AI future.
Yeah, maybe we can move on to decentralized trading. I know that this is a topic that I think nobody expected decentralized trading to be able to compete a few months ago. I think PD, you were also very much in this camp too.
Anyway, my views have evolved. Strong opinions loosely held. You gotta gather new data. Yeah.
No, you got to be able to. This is the thing. We at Delphi, we're not maxis of anything. We don't dig our heels into the ground on opinions. You got to change when the facts come out in a space like this. So maybe let's jump into this. You wrote some sections on here on like kind of what's going on in decentralized trading.
Yeah, so I think it's just important to set the record straight. In my first report, came out fairly skeptical, just given the bandwidth needs of a lot of these large training runs. Like effectively, what you do is you build a supercomputer of massive clusters of tens of thousands of GPUs, and you wire them together as tightly as possible with expensive interconnect, so they can talk to each other. It seemed very unlikely to me, based on my understanding of how these large models were being constructed, that a decentralized approach would be anywhere near as capable or performant as what the large tech platforms have been doing, right? So I was quite surprised when News Research came out with their results on a decentralized training run that just used orders of magnitude less bandwidth, right? And I think it was like 800 times less the bandwidth than a traditional approach to basically large model training. And it seems like from their research, there's no reason why this shouldn't be scaled up. And so to date, I want to be clear, like the largest model that's been trained by Noose was only, I believe, 15 billion parameters, which is, still very, very far away from the cutting edge in terms of the most performant models. But, they basically did use a decentralized approach to mock the performance of SOTA level models at, that tier and that parameter count. And so based on what they wrote this year and, what Prime Intellect did, 2 weeks later, and then what Nose followed up with another month later, it does seem like there's a realistic path towards low bandwidth, training of large models, which I think is a very big deal. And it potentially, transforms the paradigm from, hey, let's just build massive superclusters, in one particular area that's like hooked up to a nuclear plant or, has tons of energy that just gets shoveled into it, towards like, hey, is there a way to string together multiple data centers to do, much larger training runs across excess capacity? And so, yeah, I think it's very much worth paying attention to. And crypto does have a role to potentially try and gather a lot of that compute and aggregate it. But it was one of the biggest bottlenecks in crypto AI, like being a real thing, in my opinion, and not just relying on Zuckerberg and what he's doing at Facebook and open sourcing his models. So it does seem like, based on some of the early results, that there is a credible path towards decentralized approaches to training, cutting edge level models. And I think that's really exciting. So it won't just be, at Microsoft supercluster level tomorrow. And these superclusters aren't just like staying still. They're also like sprinting and wiring together ever larger clusters. But I do think it's a very real direction that research will head in. And you'll explore both simultaneously, right? So we will, head towards hundreds of thousands of H100s and B200 superclusters, but you'll also start to see people, working on heterogeneous, decentralized methods, which I think would be a big deal.
Yeah, and I think this kind of leads us into DPIN. A lot of the DPIN stuff has like an AI angle to it, especially when you talk about like decentralized trading. My perspective on DPIN, I definitely think this is a sector that's going to continue to grow. The incentives definitely make sense as someone who's deploying hardware. It's just like really hard to come up with a good long thesis for a lot of them because they're just so early in the stage, right? I think like Helium, HNT is the only token that is relatively close to fully distributed. And so it's also the biggest market cap. But Helium, I'm looking at it right now. It's like 660, and it's kind of been there for the past half a year. It had like a nice rally in the beginning of the year, and then it's kind of died off. But yeah, there's definitely a lot of like very interesting things going on in DePIN. So maybe we can get into that. I know we focused on wireless and energy in this report.
Yeah, happy to dive in here. Yeah, so I think PD said it best. The best way to view a lot of these DePINs is they are very sort of deep out of the money call options. I would say some are, deeper out of the money than others. I think Helium's probably, I would say like the best valued call option. But at the end of the day, they're, most of them on paper, at least, if you're kind of doing some financial analysis and kind of modeling these things out, they're baking in some very ambitious assumptions. That said, I think some of these projects could potentially make true on a lot of these assumptions. And I think the big thing is, they're addressing massive, massive markets. So I think that's kind of how you have to see them is, when the upside is so asymmetric, then I think they kind of get priced accordingly. So I guess we could kind of maybe start with DY, and then, if we have time, we could also do decentralized energy. So I think, kind of broadly, you can split the, sort of telecom wireless industry into kind of three subcategories. So the most common one, I guess, is Wi-Fi. This is one we actually didn't discuss too much. And the reason's kind of simple. Wi-Fi is like already very ubiquitous, especially in, more developed areas. It's more of an issue in more developing kind of countries. And there's a handful of projects that are kind of addressing that need. But just generally, the Wi-Fi markets are relatively, ubiquitous and efficient and accessible. So I would say the bigger opportunities in two other verticals. One is mobile. So this is kind of cellular data. So, when you're, if you look at your phone in the top left corner, you've kind of LTE, that's kind of what mobile wireless is. And that's kind of done by having all this infrastructure, kind of these towers and, and it's all kind of distributed, and it's handled typically, I think it's Verizon, Comcast, and T-Mobile are kind of three, main carriers, and they kind of have this collective sort of oligopoly on sort of the telecom industry. And the reason is it's a very capital intensive industry. And if you look on paper, like these look like incredible businesses, and I think this is kind of the best lens through which you can understand like why does DePIN have a role here, and what are kind of the structural advantages of a DePIN alternative. So if you look at like Verizon, for example, on paper, they have 59% gross margins, generating, I think it's like over 130 billion in revenue. And that's all on, about 100 billion of productive assets. And these are the assets distributed, kind of all over the world. So on paper, these look like really, really good businesses, right? But I think, and the EV3 guys wrote a report in 2022 that kind of highlighted why this isn't actually the case and why these aren't very good businesses. So when you kind of get into the nuances, the first big cost is spectrum. So for those not familiar, spectrum's kind of the different range of kind of waves that these networks kind of operate on, different frequencies. And the government kind of has this monopoly on spectrum, and they get to kind of determine how this spectrum's allocated. So the way this works is there's spectrum auctions, and basically the EV3 guys, again, put this better than I could have, but they said kind of through these auction mechanisms where you have carriers kind of bidding for spectrum, the government effectively grants themselves sort of a preferred equity claim on telecom cash flows. So this is actually like a lot of money. So Verizon has, I think, it's like 155 billion in spectrum licenses on their balance sheet. In other words, they've spent about, over 100 billion just on spectrum. So that's kind of like one of the biggest costs that kind of erodes the margins of these telecom companies. And then you have like, operational costs, obviously. There's very high CapEx for a lot of these networks. And then there's like a lot of it requires a lot of leverage too. So this is all financed through debt markets. Traditionally, that's financed at like 3.7%, something like that. With the rates being much higher, it's about, 5%. So long story short, like after accounting for all of this, you go from generating about like 50 cents on the dollar for every productive asset. And then after these expenses, it's about only 4 cents left over for shareholders. And these are like typically, dividend paying companies. So what actually happens is these telecom companies actually have to borrow money to actually pay dividends. So it's like not very sustainable. And these are just fundamentally like very flawed businesses. So I think, so what does this have to do with DePIN? How can kind of DePIN solve this, right? So DePIN has like inherently these structural advantages over this model, given its kind of distributed nature, right? So the first is kind of capital efficiency is kind of how you could describe this. So that's where these DePIN networks, instead of, having to put up all this money up front and borrowing all this money to distribute this infrastructure, right? They're kind of tapping into the collective, economics of everyone kind of distributed out of the world. And, obviously doing this through token incentives initially with the hope that, the network kind of sustains and then can kind of pay for itself, right? So that's kind of the first thing. The second one, which I would argue is probably the most important, and we'll kind of see how this ends up playing out, but it's sort of like an arbitrage, like a spectrum arbitrage, where unlike, the big telecom companies that have to pay these like very high spectrum costs to the government, the DePIN networks to date, like Helium, have not paid for the spectrum. And that's because they're actually leveraging what are called unlicensed spectrum bands. So the government, the FCC released, I forget the exact range, but a certain range of spectrum that kind of anyone can use, and you don't actually have to pay for. And that's kind of what Helium's operating within is that certain spectrum, bands. So that kind of gives them this very, very strong structural advantage where they can kind of circumvent these spectrum auctions, and save a lot of money. And then there's other the operational costs are also outsourced to people operating these networks. And then again, they're not tapping into debt markets because instead, people are actually paying for this. So needless to say, this gives you very strong structural advantage over traditional telecoms. So Helium's actually competing, and this is unique to most DePINs. They're competing on price, and I think this is a really important nuance. Where it's like I think it's like $60 to $90 a month for like someone like Verizon, to get access to mobile bandwidth. It's actually only $20 a month for Helium. So anyone can get an unlimited plan right now for just $20, which is pretty incredible. And then last thing I would add, kind of on Helium more specifically, is this is a huge structural advantage. They can actually sort of steer the incentives where they kind of need it to be to more efficiently match supply and demand. So I'll give you an example. So I think it's Miami that has like a ton of, activity. And what they've done is they've incentivized a lot of hotspots, specifically in Miami, where there's a ton of concentrated demand for, mobile data, right? And as a result, they've been able to generate like a lot of revenue specifically within that area, right? And that's unique to them because they're very granular sort of coverage. And they can kind of steer these incentives accordingly, right? So I think that's another structural advantage that they have that allows them to compete on cost. So that's kind of, the mobile sector. I'll kind of pause there in case anyone wants to hop in, with like questions or comments. And then we could maybe briefly touch on fixed bandwidth, which I think is probably a more interesting and possibly even bigger opportunity.
Yeah, I mean, I guess I just appreciated their go-to-market, I think is kind of clever in the fact that, you don't need to bootstrap the entire network, but they're kind of providing a little bit of an arbitrage opportunity and partnering with, the number 3 telco, who's trying to gain share, but they're also doing that while they simultaneously bootstrap their own network. So it's not like, hey, we're going to basically compete on performance out of the gate, because that's like super expensive and, really hard to build up network effects and cover the, entire US. And so I do think it's quite smart that they've basically gone this partnership route while they simultaneously fill out their gaps. And then I think they can command more and more economics over time as they build out their own network coverage.
Yeah, for sure. Yeah, and so for context, what PD is kind of alluding to there is, so they've partnered with T-Mobile to kind of provide coverage in areas that maybe Helium doesn't have coverage. But then the other side of that, which is really interesting, is there's also like other carriers are now offloading data to Helium, specifically in areas where there's very high usage. So this is actually another revenue stream for them, in addition to the $20 a month that they're getting paid. And some people would argue that this will actually end up being kind of the principal revenue stream for Helium kind of going forward. So just to kind of wrap things up with Helium, in terms of kind of the token and what's being priced in, I think it was trading, at the time we wrote this, it was at, I think, a $1.9 billion FDV. If you kind of model that out, what they're effectively pricing in is by 2030, they're pricing in that Helium will grow 21x, which that sounds very ambitious. Any project growing 21x that's pretty incredible. That said, that would only still be like 0.005% of the entire telecom market. And if kind of network effects hit escape velocity at some point, I don't think that's unreasonable at all. And I would say at a minimum, that's probably out of all the DPIN projects that you could sort of place a bet on, I would say that's probably pricing in at least the most realistic expectations, albeit, a lot of people would argue not very realistic.
Yeah. I do think one thing on Helium, I do think I do think the valuation's it's like not insane, right? And an industry with a lot of insane valuations for a lot of like dumb shit. I've been looking at Helium for like a year. I'm probably gonna NFA. I'm probably gonna buy it at some point. I definitely got more bullish on them. There was a period of time where it seemed like they're kind of dead, but they really came back with this mobile thing and have executed very well on this. Yeah, let's go into fixed bandwidth, and then also I want to touch on double zero.
Yeah, so fixed bandwidth, it's kind of like, so this is like the actual sort of backhaul that kind of connects the rest of the internet. So it's kind of broken into three tiers. So tier one is like, this is like the backbone infrastructure. So think like sort of submarine cables. These are typically like fiber optic cables kind of running under the sea. And then you have sort of regional fiber networks that connect to the actual data centers. And then the last is sort of tier three, which can be described as kind of the last mile. And this bridges the gap from the actual to the distribution points and kind of to the individual buildings. So like historically, this kind of topology has resulted in like very sort of monopolistic, a very monopolistic market structure. Because again, it's and this is kind of the common denominator you'll see among like all DPIN networks is they're kind of these inherent monopolies because they're very capital intensive. And it's kind of resulted in these winner take most at least markets. And then if we can kind of distribute this from like a hub and spoke to more distributed model through token incentives and kind of tapping into, people, then you can kind of disrupt these monopolies in theory, right? So this is no exception to the rule. So I think the important nuance here is it's the last mile that costs the most. That's the most capital intensive. And as a result, I think 51% of Americans only have access to one provider. So obviously this gives them a lot of, pricing power. And it's very expensive as a result. So Andrina is kind of the I guess pioneer in this category, in the fixed bandwidth category. And this is a project that I'm extremely, extremely bullish on. I would say probably even more bullish on than Helium. So what they're doing is there's kind of a few key trends that have kind of allowed them to build out what they're building. So first, as I alluded to earlier, the FCC released the certain range of spectrum that they can kind of operate on. And the second is like what's unique about Andrina is there's actually like technological tailwinds as well. So they're using what's called beamforming and point to multipoint technology. So fixed bandwidth, intuitively, it's fixed and it's always like these physical networks. What they're doing is they're building out almost like these satellite networks that can kind of communicate. So this allows you to deliver that last mile while circumventing sort of having to build out these fiber optic cables that are really expensive, right? So today they already have 10,000 subscribers across 10 different states. And they're already basically offering gigabit service at 30 to 50% cheaper than incumbents. So they already have this structural advantage, which is really, really unique. And this is before even integrating a lot of the DPIN elements. So to date, all they've been doing is really just partnering with like different like real estate companies, buildings that have like where they can kind of place their hotspots, and they haven't even tapped into kind of token incentives, right? So they're now building out Dawn, which is basically their DPIN kind of protocol, which is an extension to kind of Andrina as a whole. And kind of what Dawn's building out is they're using token incentives to, one, basically provide, they call it proof of backhaul. So you can actually download, I have it downloaded right now actually, but the Dawn extension, and you can kind of start farming Dawn. I don't think the incentives are going to be great for the extension, but it basically just shows kind of this proof of kind of coverage and backhaul. So they can kind of have this network and kind of map out, kind of different internet connections, which kind of helps augment the entire network as a whole. And the idea is like at scale, basically you could provide, fixed bandwidth, but just way cheaper, basically using one, this technology, and then two, harnessing kind of token incentives to eventually get people to at their house, for example, put up their own kind of hotspot. And yeah, I think at scale, this could be a very effective model. And I think it's interesting because it's at the intersection of, using DPIN incentives, but most importantly, there's actually like a technological advancement here. And the founder, Neil, he's a very, very sharp guy. He like comes from a background where he was like building these systems out. I think he was a Princeton dropout. So he's also a really, really sharp guy. And then I guess one thing I would just add here is the biggest threat to this model is probably Neuralink. But I would say the structural advantage of something like
Neuralink or Starlink?
Or sorry, excuse me, Starlink. I appreciate that, PD. But yeah. I would say like the advantage that Andrina would have is kind of physics favors proximity. So Starlink, it's probably going to be tough to compete just given that these satellites are very, far from where they're ultimately kind of connecting to. And then also Starlink's like inherently being more expensive at this point relative to Andrina. So we'll kind of see how that plays out. But I would say that's probably the biggest threat to this.
I thought Robbie was like living 10 years in the future, but I do want to hear about dark fiber. I know Ceteris loves dark fiber.
Yeah, this is this goes in line with the high throughput blockchain thesis that I kind of wrote about too, right?
Yeah, I would be curious what you guys think of this as well. And I apologize if I'm rambling here, but we'll try to get through this one quickly. So 00s, I alluded to this earlier, but you have these like fiber optic cables, these undersea cables, right? Traditionally, like the way the internet works is you're kind of routing these different, data packets sort of across the globe, right? But the way it's done right now is like super inefficient. And I think most importantly, it's optimized for cost and not performance, right? So the route that your packet ultimately takes is the cheapest route, not necessarily the most performant and the fastest route. So why does this matter? Well, I guess particularly for like distributed systems like blockchains, this is actually like really consequential and really important. Like you want, again, for more performant chains, you want it to be optimized for speed, not necessarily cost. And there's other like demands from, AI training or content delivery networks and other kind of bandwidth intensive applications that would also benefit from speed over cost. But I think the application's most interesting kind of in the blockchain context. So this model would basically allow, and I'll kind of first explain maybe, what's the deep inside of this and how does it work. So there's a lot of like HFT firms, for example, who have these private fiber optic networks that they basically built themselves kind of under the sea. And again, these are obviously optimized for latency. These are HFT firms. But a lot of these fiber optic networks don't actually get fully used. And it's very rare they're even operating at like, 60, 70% capacity. So you have a lot of idle bandwidth that they're just kind of not using. So what 00 is basically trying to do is use crypto economic incentives to incentivize these people to basically contribute their excess bandwidth to the 00 network. And the idea is at scale, you build out this massive network where people can kind of pay for this premium bandwidth. That's a lot quicker, right? So you kind of have the normal routing system, and then you kind of like this express highway system that does things just a lot faster and a little more expensive. And the applications are specific, I guess, in the blockchain context. So this could be like faster transaction processing. This could be, more consistent validator performance. So things like this. But I'm curious, Ceteris, I don't know if you guys wrote about this in info or not, but yeah, curious if anyone else has kind of a take here.
I just mentioned it because it was announced, I think, the day before info report went out. But yeah, this is something that people have been hinting at too since Breakpoint, especially Mert. They're basically building a new internet. It's just like a very elegant design. I think this whole increased bandwidth, reduced latency thing, there are just physical limits to, how short you can get block times, just because of sending a packet from, New York to Tokyo takes a certain amount of time. And I think the way it works today is it's just super random, right? So if you're sending a packet from New York to Tokyo, it might actually go to Chicago first and then go to, London, and then it goes to Tokyo, right? And so that, again, just adds more latency. And the whole point here is if you're willing to pay for that direct line to Tokyo, you can get it, right? And it's just there's light fiber and dark fiber, right? And so light fiber is the stuff that's being used all the time. And then dark fiber is essentially the fiber that's just sitting there and it's not being used. And so they want to light it up. That's like the TLDR. Let's light up the dark fiber, right? This is very, this whole high throughput blockchain thesis, the whole thing is reducing latency. I don't think L2s compete with these decentralized L1s like Solana, Sui, Monad when it comes out, Hyperliquid, if they're able to do this because of their single sequencer architecture, right? The holy grail is getting multiple concurrent proposers on this global distributed network. And if you are able to, one of the ways to do this is, you need to architect the actual blockchain itself, but you need to fix the whole networking bandwidth layer too. And so that's where 00 comes in, and it's just fixing the internet for this specific use case. And that makes me pretty bullish on actually getting a decentralized NASDAQ one day, right? It's a very ambitious target. The Solana manlets care so much about this that they're literally building a new, this is from Austin, from Solana Foundation. There's some Fire Dancer contributors, some others. I don't know. It makes me really bold up on the long-term potential of blockchains being able to be actual price discovery for a lot of these assets, because the way it works today is that price discovery is still predominantly happens in on centralized avenues, right? Centralized venues. And so actually being able to get global price discovery with multiple concurrent proposers where you have like leaders in like Tokyo, New York, London all at the same time, that's kind of the holy grail. And that's also why I don't think people like to compare Solana against Ethereum a lot. They're two very different things. Like if the world demands a global decentralized price discovery network, that is not something Ethereum's competing in, right? That is something that Solana's competing in, something that maybe Sui's competing in. Again, some of these newer ones coming out. It's like a very specific thesis and like very specific product. And this is kind of like the lever that I think can propel the industry there. So yeah, I'm pretty bullish on the idea.
One thing that I've kind of been thinking about with 00, you guys both hit on it, is the crypto internet is different than like the normal Web 2, whatever, the traditional internet. So like when I'm loading up a YouTube video or a Netflix video, Netflix or YouTube doesn't necessarily care if they serve me that video in 400 milliseconds or 500 milliseconds. They just want to make sure that it's under a second and I don't have any like lag time, right? But there's no like cost to them or to me if it's 400 or 500. That's kind of how I think about the public internet. Whereas in crypto, there actually is a real cost if your transaction takes 400 versus 500 milliseconds, and being able to model out whether it's going to take this or that becomes really, really valuable. And right now, like over these kind of traditional public rails, it's really hard to figure out, is it going to take 400 or 500 milliseconds? And I think kind of the fundamental problem that 00 is trying to solve is give people more certainty over the time it's going to take to get a piece of data from one part of the world to another. And that, I think the really cool thing is that actually wasn't a huge problem. It was a problem for like HFT people, but it wasn't like that big of a problem before crypto came around and kind of like embedded financialization into this like very base layer of the internet. So yeah, I'm super bullish on 00 as well.
Yeah, it's very well said. And just to underscore that point, because I do think it's really important, the internet today is like the way data is routed, these data packets is strictly optimized for cost. And what 00 is trying to do is basically, bifurcate the system into things that are optimized for cost and things that are optimized for performance, right? And I think at scale, and this is kind of the broader vision, I guess, stepping back for a second of all these DePIN networks, is it's kind of similar to people who are familiar with Enron. This is kind of, and Enron like ended obviously very, very poorly, and that's why like,
Thanks,
you don't want to, yeah, exactly. You don't really want to conflate the two just narrative wise, but I do think Enron was directionally correct in their vision. Maybe this is a contrarian take, maybe it's not, but where effectively what they were trying to do is create sort of markets, like, and this was before tokenization, but it would kind of be like securitizing everything from bandwidth, compute, energy, right? And what 00 is doing is basically, you're tokenizing performant bandwidth, right? So you're getting even more granular than you could. In my opinion, this is what crypto is good at, right? It's good at kind of two things. One is incentives, and two is creating more efficient markets, right? And I think if this is like the vision for crypto, I'd be very happy if we kind of get this to scale. And the EV3 guys have a very elegant way of putting this and I think this becomes also very true as we head increasingly towards sort of an agentic economy, but maybe the currency of today is sort of, dollars. The currencies of the future are kind of going to be, compute, bandwidth, storage, and energy. And DePIN is basically giving you sort of the substrate to basically build markets where you can tokenize these things and have efficient markets for these. But yeah, and maybe to put it differently, like, an AI agent doesn't care about dollars. They don't need dollars. They don't demand dollars, right? So what becomes sort of the most scarce and demanded resources in this agentic economy? It's those things that I kind of listed. So that is kind of what makes me also very bullish on DePIN. It's not just basically building out these distributed networks and disrupting these monopolies, but it's also actually what those networks allow is actually having markets built on top of these, where we now have more efficient price discovery for all of these things. And I think at the end of the day, that actually benefits more than anyone. It benefits, us, the kind of end consumers.
Yeah. I thought that was well said. And one thing we didn't cover that's covered in the report, so you should go read it, is basically how, markets for data are impacting this equation, if indeed data is the new bottleneck in AI. So I think there's some juicy segments in there around how data can be used in embodied intelligence and unlocking private data sets. But in terms of unlocking markets, that seems to be, a big theme for 2025 is how do you unlock markets for data? And it seems like crypto does have a role both across DAI and DPIN. So I think that's also worth reading through in our report.
Yeah, definitely go check out this report. It's like, I don't know, 2-hour read, but it's an easy read. It's very engaging. You'll learn a ton. I thought everybody here did a great job today on this pod. I think this was probably our best discussion that we've had on the year aheads. So again, appreciate all the guys coming out here, taking the time, different mix of time zones here. So appreciate everyone making it work. And once again, if you're a listener here, go ahead, check it out on the portal. You can get 1-month trial for $199. That gives you all the reports we've made and like everything else on the portal. And yeah, thanks everyone. Have a nice holidays, and we'll see you all in the new year.